Hello, hello. Can everyone hear me?
Can hear you.
Awesome. Good morning, crew. Just gonna wait a few minutes to see if anyone else wants to join. I see a lot of familiar names here.
Welcome.
All right, so I'm gonna go ahead and get this started now. So, good morning, everyone. Hope you had a good Easter weekend. Some of you may know I'm Mr. Pickles. I've been on the server for a little bit under a year now, and it's been a pleasure to be with you guys. So I wanted to start our first ever class together, telling you a little bit about myself. I've been trading since 2006, and I am a day trader, right? In positions, out of positions, same day. Not really a fan of swings, but I notice a lot of you guys do hold those kind of positions, and that's great, right? Whatever makes you money, that's what works. Uh, if you guys can see the stream, this is a ES chart, and I'm just going to show you some basic charting I do every day, and it's a futures chart, but you can do it on any chart. And we're going to do this on the 4-hour chart with regular candlesticks. So the first thing I wanted to show you guys is drawing supply and demand zones, right? I call them HTF, or higher time frame, and they're really easy to draw. You just get your rectangle tool, and you're looking for swing highs and swing lows, right? This is a swing low right here. Oops. A swing low is a low that took out a previous low. This candle right here took out this previous low. So this is the new swing low. So we go here, text, HTF, demand zone.
Went from the yellow one. When is Melania here with the new one? Are you going to be able to survive?
And then you can also do it with supply zones, which is just like this up here. I like to make it green to make them stand out. All right, there is many different ways to draw a supply or demand zone. You can do the entire width of the candle, right, from the top of the wick to the bottom of the wick, or just the bodies. What I'll do is, if it's a swing high, I'll do the top of the wick to the bottom of the body of the candle. As you can see here, I don't do the wick there. As you see, it's vice versa for demand zones, where the top of the wick does not get included. This is, you ask 10 different people how to draw a zone, you're going to get 9.5 different answers. And you can use your discretion and how you want to do this with by looking left on the chart, by how did this zone interact with price beforehand. If you take this bar and move it all the way over, see how it just comes up to these wicks? That gives you that confluence that this zone here is being defended before it was even established. So you can go all the way back and draw your zones like this. And zones are, right, a supply zone is a supply of sellers are defending this area. And this is a demand zone of a concentration of buyers supporting this area. This is a one way to draw support and resistance levels, or rather zones, based off historical price action. But we're at all-time highs. So how do you plot SR levels if you don't have any historical price action to go off of? And that is where you have some scripts that will plot those lines for you, or okay, you can use scripts to plot those lines, or you can use something called extensions or expansions. One of those is your Fibonacci retracement tool, right? Fibs are real easy to do. You just do from your high or from your low to your high. Hold on, let me get rid of these zones, make it stand out better. Oops, I'm going to flip this over so it's easy. There. So we did from the low to the high. And you see over here we had the 0 and the 1. And a fib extension goes further than 1, right? Fib has certain numbers in the Fibonacci sequence, right? 272, 415, 618. These can be used as forward-looking levels in price areas that have not been discovered yet by price discovery. This is how I get some of my levels. There's also another script called ATR, Average True Range, and that uses a specific formula to calculate the what's called the true range of price action for that day. And I'll show you right here. We're going to go to a 15-minute chart. Same thing on ES. And here is the ATR for today. As you can see, this was already plotted the moment the market opened. And we see right here, this ATR level has been traded and transacted at for several hours. And then that dump in the pre-market went all the way to an ATR level. This extends all the way up to 53.56, an area we have never been to before. You can use all of these levels. You can use volatility levels. You can use GEX, DEX, expansions. I'm sorry, these are extensions. Expansions is, let's say you have a 10-point range. An expansion is 50% of that, right? So 50% would be 5, so you do 15 of that range. Or 100% expansion would be 20, double of 10. And you would plot that level above yourself. Or, I'm sorry, above price action. Now, the one indicator I love using is VWAP. Right, this is a line that shows the average weighted price of that day's price action. You can tell if the day is going to be a range day or a trend day based on where price action is relative to VWAP. Right, we see here overnight, price has not left VWAP, and it's been a grind. Right, it's been about a 10-point range all night long until about 8 o'clock, where price finally broke away from VWAP, and now look at these bars. They're much longer, they're stronger, and we're actually so far away from VWAP that it's now starting to mean revert back towards it. Right, as day traders, it's our job to find our edge, our market edge on what we can trade, how we can trade it, and identify that trade as early as possible, right? Putting all the puzzle pieces together in the market to be a participant as long as we can. VWAP is one of my favorite tools. Another one is the 21 EMA on the 15-minute, which, as you can see here, has actually been very in line with the blue VWAP line. That's known as confluence, when multiple signals line up to support each other. I'm just going to turn these off just to keep the chart clean for y'all. Now, some people have been wanting to know how I draw my charts every morning when I do my pre-market analysis, and that is mostly based on the clock. Where's price at certain times of the day? Now, one of the reasons why I trade ES is because ES is a 23/5 instrument. It trades 23 hours a day, 5 days a week. And that's important because we can track where price actually went during overnight and track gaps that are there, gaps that just aren't being displayed, or high volume or low volume volatility that occurs during the overnight Globex session. And that's part of clock trading where certain things will happen at certain times of the day. And if you've seen any of my charts in my journal, we do certain times a day where we have the RTH close, right? When the market closed on Thursday, right, which would be right here. And then where settlement happened, right? The market closes at 4 p.m. Eastern Standard Time, but it actually trades for an extra hour all the way to 5 p.m. So this is RTH close. I'll just put that right in the notes. But the settlement is actually down here, a couple points. And we call that settlement close. And then on the next trading day, which was Sunday night at 6 p.m. last night, the market opened up here. And that is the start of the Globex session, Global Extended Trading Hours. So last night we had, from here, 53.04 to 53.14, a 10-point gap up. The market barely tracked back down into the gap before it went off on a rocket for the first part of the night. As we can see now in RTH Open, it's trying to fill that gap, but it hasn't yet. See all these down wicks? This is buyers supporting price and not wanting to re-auction the gap yet. Just there is no interest from either buyers or sellers to fill that gap with volume. Not yet, anyways. It could happen later. But right now, this level, I would mark that as a hard support level because we've wicked down into it, but we have not closed a candle underneath us, not a 15-minute candle. This is a liquidity sweep below to grab liquidity to go up higher. All right, it's 9:45. This is the close of the first 15-minute candle. This is a bullish candle. Right? If bears needed to maintain strength, this trend needed to continue into the 9:45 candle. It hasn't. When RTH opened, the bull stepped in and said, "Nah, we're done selling off." The next point of interest on the clock is 10 o'clock. The second 30-minute candle, and is also when all foreign markets, or I'm sorry, all foreign funds are able to fully trade the U.S. market. Not everyone can trade the 9:30 open, but by 10 o'clock, everyone can do it. So that's why I love 10 o'clock, trading the 10 o'clock candle. I call it my magic time. That is when, that is my highest probability trade of a counter trend trade, right? At 10 o'clock, which is, it doesn't always happen exactly at 10. It could happen as early as 9:55 or as late as 10:10, right? That 15-minute window, that's the magic time window. That is when price is going to either reverse or retrace, and you can bank on it almost every single day. The 10 o'clock magic time comes from the trading concept of session ranges, right? You have your AM session, you have your lunch session, your PM session, right? But that also applies to overnight trading, right? You have your electronic session, which is from 1800 to 2000 hours. I'm sorry, 6 p.m. to 8 p.m., where the Asian markets aren't yet open, but US assets are still being traded. So this is a very low volume environment. And the way I do that on my charts is I put a vertical line for 1800 all the way to 2000. That's the electronic session. And we see it was a strong trend up. And then the Asian session opened right here. Right, and Asia is from 8 p.m. Eastern time, and it goes all the way to the Euro Open at 3 in the morning, which is right here. So when we break that up, we see that Asia has actually been rather flat. A little bit below its open, but not too terribly bad. So then we go to the Euro session, which is from 3 a.m. to US pre-market at 7 a.m. Let me just label this here. Then here's Euro Open. And now look, at 7 a.m., the US pre-market open, and look what happened right at 7 a.m. This sell-off all happened in US pre-market. This is why I believe session ranges are so important. Understanding what each session does, or rather, sometimes doesn't do. Right? If we go look at from the Asian session and the Euro session, price didn't really go anywhere. It didn't go up. It didn't go down. It just chopped this entire time, all of Asia and all of Europe. And then US pre-market comes in, and we get this sell-off right here. So then after pre-market, we get our 9:30 session, our RTH open. And I'm going to zoom in a little bit just to make it easier to look at the candles. And see, here is that bottom line of support on the 15-minute that has a couple 5-minute candles that closed beneath it, but price came and brought it back up. This was not a strong look and fail below. It was a little bit of a dip, and then it came right back up. Made a new swing high. Right here's wicks above the previous swing high. Right, it made a higher high, but it also made a lower low. So this right now, I would not trade it. Right, until the market picks a direction, you want to fade that range, and that range right now on a 5-minute chart would be this. Here and here. Here, let me make these a different color so they stand out more. This would be your trading range right now that you want to fade the extremes or wait for an actual breakout to happen when the market will shoot up, or conversely shoot down out of that range. In trading, especially in day trading, we have to be patient for our entries. Don't force a trade that's not there. Wait for your trade setup to happen. Wait for your A+ setups. Trade smart. Don't apply the correct trading strategy to the market condition that's being given. Right? When you're trading a trend day where it seems like the market just keeps going up and up all day long, that is a different trading strategy than you would use during a choppy day, a crab day, a day where the candles only know how to go right instead of up and down. Putting those puzzle pieces together in the market as early as we can to figure out what trading strategy to apply to the market that day. And what worked yesterday might not work tomorrow. What's been working for 6 months may not work next week. As traders, it's our job to always adapt every single day to what the market is giving us. So in about 5 minutes, we will have our first 30-minute AM session range for the regular trading hours. Right, the AM session would be the first 30 minutes, the high and the low. So we're going to actually adjust these to, I think it's here and here. And this right now would be our AM session range. So we call this AM high and AM low. As we're sitting here in chop, what do you guys notice? We've been hovering around our Globex open for the past hour, 90 minutes. The Globex open was where ES opened all the way back here. Several hours ago, 6 p.m. last night. So while our overnight inventory was long, because we spent the entire overnight session above our Globex, when we approached RTH, we're now back. We've re-auctioned all the way back through any of those gains from the electronic session. Pre-market just sliced through all of it. So we're now entering our magic time window. It is 9:56 right now. And like I said, between 9:55 and 10:10, there is going to be, most of the time, not every single day, but majority of the time, about 90% of the time, there will be a retracement or a reversal in this magic time window. It is one of my most high confidence plays. It would be one of the trades I would choose to front run because I am that confident in it happening. So how would this happen today? Right now, we are approaching our AM session high. Right? If this candle gets up to here by about 10:05, I would be more interested in taking shorts or puts to the downside on a retracement back to the Globex open or to our RTH opening price, which is down here at 53.11. With my stop loss being making a new higher high than the AM session high, which is right here. So I would be playing downside with my stop loss somewhere up here. And if we turn on VWAP, we're well below VWAP right here. So my stop loss would be right here at VWAP. This is a futures chart, but you can use any of these price levels or any of these indicators on any other index on any other individual. You can even use it on crypto. Anything, if it's a candlestick chart, you can draw crayons on it just like this. We're coming to 10 o'clock. I'm pretty sure there was data at 10. Yeah, there we go. The PMI just came out. Now, with data, as a day trader, the actual numbers from data releases or news events is largely meaningless. It is how the market reacts to the data that truly counts. That is what we can make an actionable trade on, is how the market digests that data and how it reacts to it. We see this large liquidity sweep down below, right? Went all the way down to Globex open, past our RTH opening price. And this is data releases is part of why the 10 o'clock magic time window can be so strong, is because a lot of data also coincides with releasing at 10 o'clock, a half hour into cash session, into the market session. It's human nature to want to make a trading thesis and believe in it, have faith in it, and absolutely think that it's correct. But we have to always adapt. What might have been true and standing out clear as day 15 minutes ago, right? The market will go, nah, we don't care about that. That's your thesis. That's not what we plan on doing. So that's where a lot of people, when they follow other people's trades or they follow other people's alerts, they don't or they're not sharing the same mindset. The mindset is always changing. So two people could have been on the exact same page 5 minutes ago, and then they're diverging in just a candle or two. I still believe that we're going to retest the AM highs before we retest AM lows. But I could be wrong. We were now just 2 points, 2 ES points from tapping it. Right, where was that support level on the 15-minute? Here is where we had our last 15-minute candle close. So we do that on the 15-minute, then we go back to the 5, and we see that it's right here. If this candle closes underneath this line, I would no longer be so strongly bullish, but that would not make me bearish either. Right? Like I was telling you guys earlier, this is the session range that we're in. You want to fade the extremes. You don't want to trade this chop unless you're doing like a 1 or 2 point quick scalp. This right here is untradeable. You want to have your trading strategy clearly thought out of what you're going to do. I'm going to trade the breakout, or I'm going to fade the range, or I'm going to scalp this. Right? You want to carefully construct that trading entry, what you're going to do in the trade, what you're going to do to get out of the trade. And we just tapped the AM lows right here. Oof. So we're at 10:05 right now. This would be the of the 15-minute window. 10:05 is the most likely time for it to occur. So if this was a retracement or a reversal, this will be a green candle right back upwards. While we're sitting here staring at a chart that's not really moving very fast, if anyone has any questions, ask away. What a wonderful retracement, all the way back to that 15-minute support. We spent, if we go to the 1 minute, we spent just a couple candles below this 15-minute support, and we're already going back up. This 10:05 candle, that was our reversal candle here. I had initially thought we would test this first, or VWAP, and then go down. But with that data release, we went down instead, and the reversal was to the back up to the upside. So that's our first 30-minute window. That is the AM session range. Then we have our 1 hour window, right, from 9:30 to 10:30. That's what's called initial balance, IB, and that's the same as the AM session range, where you plot the highs and the lows. You plot the highs and the lows of the first hour of trading. Right, so that would right now be here and also this yellow line. So we're going to do... I'm just setting it up for right now, and I'll drag these lines to where I need to put them. I'm going to make this yellow and dashed. So this would be a good way to look at your expansion levels. So if we measured the distance between the AM session range, we're looking at 9 points, not 9.5 points. So 50% of that, right, would be, we're just going to round up to 10 just to make the math easy for everyone, right? That would be 5 points. So going 5 points plus 50, right? 17 plus 5 would be 22, 25. That'd be up here. Let's make this white. And we'd call this plus 50 AM range. Then we'd add another 5 to that, and it'd be right here. And this would be your 100% expansion level. And then we'd also do the same down here, which would be our low minus 5 is here. Another 5 is here. And now look at all these lovely lines we got on the chart. Now you can get over analysis paralysis where you just have tons of lines on your screens, right? This is just a couple lines when you can consider you can do the same for the Asia AM session, the same for the Euro AM session, right? You plot the highs and the lows of Asia and Europe, so that's 4 more lines. You can also use historical lines from previous session, right? Your Fridays, open, high, low, close. Your previous week, open, high, low, close. Previous month, and then you can even, if they apply, your 52-week high and lows, right? The all-time high that we set in, I think it was like the last 5 minutes of the trading session on Thursday before we closed for the holiday. We made a new all-time high. That's going to be a strong resistance level. So you're going to have, if you plotted all those, you would have a ton of lines on your screens. It'll look like a light bright show. You want to delete any of them that the market just doesn't seem it wants to care about. Right? Like there might be a level that like see here at the Globex Open, this is being traded and respected. We see it bounce several times on both when price action approaches it from both sides. It actually has not been able to leave and stay away from the Globex Open for more than 15 minutes. So right now we are glued to our Globex Open. But like down here, the expansion ranges to the downside. If we don't ever trade below here, I'm just going to delete these off my chart because you don't want to clutter your chart, right? you want to follow the KISS theory. Keep it super simple. The less stuff you have on your chart, the easier it is to read, the simpler it is to trade. But having these lines initially helps with confluence of, like right here we have VWAP, the AM high, and currently also the initial balance high is all right here within a couple of ticks of each other. And probably the 21 EMA is right here. So in this 3-point window, we have several strong lines of price interest that is going to be traded. As we see right here, price came up to the 21, wicked above it, but could not stay above it. So right now, if we want to be bullish, we need to be over this line. We're still over this 15-minute support, but we're barely over it. So if you want to be bullish for the day, 21 EMA, Globex open, VWAP, and the AM highs. That's all sitting above us. That is a lot to push through with buyer support. And that's where I use something called market internals that helps show strength of buyers, right? It uses tick data, right? How many buyers versus sellers is going on in the market at this point in time? And let me pull up the ticks actually and see if I can't get you guys a screenshot. So here's the ticks for today. And we're at minus 428. That means there's currently way more sellers than there is buyers right now. This 21 EMA and the Globex Open is being strongly defended by sellers. We would need sellers to step away, get exhausted, or choose some other price level to defend for the bulls to step in. Right? Sellers need intent to sell off the market, but the bulls can sit around and do nothing, and the market will passively go up. Because one of the market fundamentals is the market will go up, right? The meme of stonks go up. Part of my trading is also something called what I call market awareness of what is the rest of the market doing right now. Right? We're just looking at ES futures. That's the futures of the S&P, but we have 3 other indexes. We have all the sectors. We have also other asset classes that have a influence on the S&P. Right? One of those is VIX. Right? The volatility index. This tracks SPX options, but that has a big impact on what ES is going to do because they both ultimately track the same thing, and that's the SPX underlying. Right? We had VIX gap open, and it is currently trading over 13, which, as we could see on Thursday, or I'm sorry, for last week, it stayed all around 13. VIX is elevated. We're now 4.8% for VIX for the day. This VIX going up, VIX has an inverse relationship with SPX most of the time. When VIX is up, typically SPX is down. That's not always true, but generally speaking, that's the relationship they share. And then we also had that same sort of relationship with DXY, the dollar. The dollar doing this right now is not bullish for equities. Right? This is what's holding the holding ES down, holding equities down, is the dollar deciding to test 105 today. Then another thing I look at is the 10-year, right? All the rates for paper is going up. When bond yields go up, equities tend to go down. And as we see here on the right side of the screen, I have all my tickers on my watch list for paper, and all the long-term paper is 2%, 2%, 2.5%, 2.5%, 2.3%, up for the day. TLT down 2%. That is not good for equities, boys and girls. That's pretty bad. Would I short the market right now? No, because sometimes bonds are a leading indicator for equities, so they won't always happen in the same day. Just because the 10-year is up 2.4% does not mean ES is going to drill right now. Right? ES is only down 0.1%. But having these other, being aware of what's going on market-wide helps give us strength of confidence in a trading thesis. Right? If VIX was going down, if Dixie was going down, if the yield on the 10-year was going down, then that would give me a market-wide confidence boost in taking a long trade when the rest of the market is all in agreement with each other. But right now, the assets I track, that we're tracking now today together, is all pointing towards not bullish. I don't want to say bearish because, right, the indexes are barely red, right? ES is 0.08. NQ is actually still positive at 0.3%. Another thing we could look at is the top 10 S&P holdings, which we see up here. Not a lot is actually red. We actually have some tickers that are very green. We have Google 2.7%, Broadcom 2.2%, Microsoft 0.8%. Right, the only two sectors in the top 10 that are red, well now 3, is Apple, Amazon, and Eli Lilly. So what I would be doing is I'll be checking Apple, and I'll be looking for the eventual, or I'll be looking to see when Apple bounces, when does it reverse, when does it find support and start going back up. Right, this is the only ticker in the top 10 that is, or I'm sorry, of the Mag 7, right, the Magnificent 7, that is red today. That is red right now. So if this lifts, if Amazon lifts, then ES is going to lift, NQ is going to lift. So that's being aware of what's going on in the market with the top 10 in the index. And then we also have the sectors of the S&P. Right, which we have right here. We have tech, financials, healthcare, consumer discretionary, communications, and then we have the rest. These top 5 are much larger, much heavier weighted than the rest of the sectors. XOK being by far the biggest. Right, NQ, the growth index, is made from XOK, XOY, and XOC. Those big 3 sectors. So when we look at these sectors, we see what is holding ES down. Right now, it's the healthcare sector, financial sector, consumer discretionary sector. The highest green in all the sectors is tech, and that's up only 0.5%. So if we had a bearish thesis, then we're going to look at what is holding the S&P up right now? What is preventing it from going down? And we see that's XOK and XLC. So if XOK starts dropping, we want to start flipping to a bearish mindset, right? The last guy holding the line, the last bull propping the market up today is also retreating down in price. We can also apply that to the opposite, right? If XLV finds a floor, just like we were talking about with Apple earlier, if these find a floor and start going up, then ES is going to lift. If ES is going to lift, NQ is going to follow it. If NQ is going to follow it, then we're going to see YM pick up. That's the Dow Jones. And then we track what is going on. We play our awareness game all day, every day to make sure everything across all our sectors that we're tracking is in agreement with each other. Right now, we still have Dixie that only knows how to go up, and VIX is toying with its high of day. That's not a very bullish signal right now. We have XLV still making its low of day. It's just ticks away from at its low of day. So I'm going to put Apple up. Look at this, Apple. First 15-minute candle that's green so far. Does it hold its green? Right here. We're going to put our line. Let's make it green. And make it solid. There we go. So this would be a support line for Apple. We want to see it bounce and try to go back up to potentially go all the way back up to its opening price, or at least take out the high of the previous candle. That, if Apple did that, that would give me support to start looking at longs on ES, this chart that we looked here, that has done pretty much nothing in the 10 minutes we've looked away. We are coming up on 10:30 now, and that would be the first hour where the initial balance is set. So we would actually take this and move it back down here. This would be the initial balance low, should there not be a lower low set. And we see here, the AM highs have not been touched. 21 EMA has not been touched. VWAP has not been touched. It is only 1 hour into close, and it looks like our high of day for the entire day might have been put in the first 15 minutes of trading. This 15-minute support level has failed, so we're going to delete it off our screen. We are below our Thursday close. We are below our Thursday settlement price, right? So when you run out of historical price levels, you want to look further left on your chart, right? So we're going to go to a 4-hour chart and see what, like we see right here, see all these downwicks right here? This is a strong support level. We've wicked down into it a few times, but have not closed a 4-hour candle lower than this 5303. Even over here from 2 weeks ago, 5300 has been a strong support until it eventually broke down and we went all the way down to be retesting the 5260s. Yeah, with Dixie doing this and in long candlesticks that they are, this is telling me don't be bullish. If you're gonna trade, do short and sweet. 50%, 15% gains, get in, get out. If this 4-hour candle can break past lower lows than these wicks, that would start to make me lean bearish down to about here, 52.97. Yeah, I'm not like most traders. Well, they want to hold the position for 30 points or hold it for 800% gains. I'm all about that 5% to 35% gains. Compound it, do it all day, every day. So we're actually going to go back to the 5-minute. It is now after 10:30, so this is the IB. This is the initial balance range. Right here is the low. Here is the high. It is split low from the AM range. High of day has not had a proper retest, right? This is the closest testing the high of day since it was been made. Since then, it's been down. And actually, for those that like trend lines, we can see that price since the US pre-market open has been hovering around this trend line, right? It has been in a sell-off mode. Oh, yay. Hold on a second, guys. I gotta go. I'm still here, guys. I just want to make sure my CL trade is actually going through. Hot damn. Okay. So we are now breaking the IB low. We're making a lower low. VWAP is way up here. 21 is way up here. If you were if you're itching to trade, this is where I would start looking for going shorts with puts or selling premium at the high of day, right? Selling a CCS up here, right? And just letting premium eat all day long until the 21 EMA would be your stop loss. If price got on the upside of that, that's when I would start looking for the exit on that CCS up here. If you wanted to go short here, you don't want to short at the low of day. You want to wait for some kind of retracement, right? See how this is going back up? You want to wait for a green candle to take price back up and then short it on that mini retracement. You don't want to short at the lows. That's asking to get blown out. I've been flapping my gums for an hour, so if anyone wants to hop on and ask questions, go ahead. I will see. Oh, you guys have been talking. I'm just now checking chat. My apologies. Let's see here. All right. So Lasher asks, "What do I do to get myself into my trading mindset every day?" Well, I have a routine, right? I wake up at 6 in the morning every day. I make sure I take care of myself. Make sure I have a nice hot cup of coffee. Eat something. Make sure I am in a good mood, right? You don't want to trade with negative emotions. That usually leads to emotional trading, which leads to desperation trading, right? I have to trade so I can do this, or I need to trade so I can pay my bills. That is a bad mindset to have. It is a trading psychology, right? Trading is 90% mental against ourselves as a human being versus the market that understands ourselves better than we do. There is a book I'll recommend. It's called Trading in the Zone by Mark Douglas that helps with that trading psychology of how we trade with the proper mentality. And to expand on that, Lasher, with in a trade, if a trade is making you emotional, right, especially if it's making you upset, the position size is too large, right? You should be able to robotically make a trade where it's like, okay, I'm opening up one contract of XYZ and I'm doing it here, and this is my goal that I'm aiming for. It's very mechanical, robotic response. If there's emotion attached to that trade, the trade is already in a bad environment. It is already bound to fail. You're letting your emotions dictate the trade, not logic and not your trading skill. And the market will see that and it will jump on your shit faster than you can defend yourself. The market is so good at being a cruel. Hi, buddy. The market can be so cruel at turning an emotional trade into blowing the fuck up. And that's where proper risk management, proper position size is so key to trading, where we can manage our positions and survive as a market participant as long as we can. You survive and then we thrive. Here you go, buddy. Is that what you're wanting? Good boy. Sorry about that. My dog knows how to work me for snackums.
Pickles, I do have a question. Can you guys hear me?
Yeah, I can hear you.
Okay, yeah, I was just wondering what that plus and minus 50 and 100 AM range is again. Like, how did you find that?
Oh, that is called expansions. right, we looked at the AM range, right? The AM high and the AM low
Okay.
was a 10-point range. So with expansions, you would do 50%, 100%, and if you wanted to, if it made it that far, you would do 150%. Right? So 50% of 10 is 5 points. So you would go 5 points out from your AM range low, right? So that makes it easy. 5307 would be 53. Hold on. I didn't do my math right here. Right, 10 points would be 5, so this would be 5102.25. So then 10 of that would be here. So that's expansion ranges, right? Where you take the range of the range and you would add 50% to that, and that would be your expansion levels, or 100%, or 150%. You could do that with the AM session range. You can do that with the overnight range, right? The overnight range was from here all the way up to here, and you can, let's see, that's 5312 to 5333. So that's what, 21 points? And so you can take 21 points from the low, which would be, right, 5311, that'd be 5290-ish, right? That's, let's just say it's right here. And you could say that this is 100% overnight expansion.
Okay.
Right, because that's 100% of the overnight range move to the downside.
Got it. And you're looking at that first candle to calculate the range, right? And you did it on the 5-minute, but when we were first doing it, was it on the 15-minute? That
I think
candle?
that's why my lines were off, was I was doing it on the 15-minute.
But it's supposed to be calculated at the 5, like that first candle?
When you're trying to identify like a specific price level, you want to try to zoom in as much as you can to like really dial in like to the tick. So I mean, you can do it on the 1 minute if you want to be like to the tick exactly.
Got it.
Right, but when SBX trades, 30 points in a day, 30 whole points, being off by a couple cents, doesn't really matter, right? Like NQ can have a 200-point day, so being off by 3-4 points, it's close enough, right? Close enough for government work. This here. Did anyone post anything in the regular trader chat? No. Does anybody have any questions? Anything they want to talk about? I know a lot of what I said is like drinking water from a fire hose. It's a lot to take in all at once. And this is only the first chat session I've had with you guys. I'm looking forward to possibly doing more down the road and continuing building on what we have learned here today. Out of the lines you've drawn this morning, what do you find tend to be the strongest? That depends on which line the market is going to respect the most, right? Which line does the market actually trade off of or is going to stop at? So if I had to choose any of these lines, it would actually be this diagonal trend line. Since pre-market open, we have came back to it several times with price action coming from both sides of it. If price action here broke away from this trend line, right, we're seeing a strong downtrend of price action, right? It's breaking away from the trend line it's been trading for several hours now. But in general, a generalized answer to that would always be what line had the most volume in it, the most traded volume. And that's almost always going to be volume during regular trading hours during the market session, right? And that would be the AM session ranges. That first half hour of trading usually has the highest volume of the day until we get into power hour. So a general answer to your question, it would be the AM session range. If you drew nothing else on this chart, it would be the AM session range, and that's where we see the AM highs not touched, not even a proper retest of them. So if you're writing theta, doing spreads, I would use that as a indicator of high of day, and possibly go maybe 1 or 2 strikes above that, right? In case there is a test later into the day and it just wicks up into it for a look and fail, but doesn't actually discover above it, right? It doesn't find acceptance above it. So you want to give yourself that little bit of wiggle room. So since we are out of lines that I drew for today and overnight, I am going to go to previous sessions. First, we're going to turn these off so they're not in the way. Right, when was the last time price was at this level? Right, and we're looking at Wednesday. So what was the Wednesday AM range, right? Here was the Wednesday AM high. And here is the AM low. We're gonna make these purple. And then we're also going to mark Wednesday's low of day. And there is 3 further support levels going down. And look at that. Wednesday AM high. We bounced right off of it. Look at that. Isn't it great when it works out like that? All right, it is 10 minutes to 11. I am going, if anyone has any more questions, I will stay on until 11 o'clock and then I will sign off of here. The AM high and AM low is the high and low of the first 30 minutes of RTH. So whatever the high and the low, whether that happens in the very first candle, right in the middle of the session, it doesn't matter. Whatever the high and the low in that 30-minute window is. So we look here at 9:30 today. Right, let me delete this purple line so you can see it better. There is the bottom wick of the 9:30 opening candle. Here's the top wick of the 9:45 candle. And here is 10 o'clock, the 10 o'clock candle. So our range is this box right here. Right, because the 10 o'clock candle starts at 10. So we go all the way to the close of the 9:55 candle. So here's our high, there's our low. This is the AM range. Alexander, from a day trader's perspective, my first reply is what I would repeat here today, where I would wait to see if the 52-week low would be a solid floor, a solid support for a price to bounce off of as a day trader. And then we talked about it's actually a multi-week long hold where you just like you said you were doing, hold it and wait for profit. Nike did good in its earnings, so it selling off is a little surprising from an investor's point of view. VIX is now up 6.5%, making new high a day. Dixie just coming off its new high of day. Apple failed that 15-minute support and is going to be testing its low of day. We now have another stock in the top 10 that is teetering on red, Amazon bounced up a little bit, but that's only 16 cents. That can instantly flip red in a minute. We look at all of our sectors. XOK is down more than it was earlier. XLC is also down, and XLE, being the strongest green of the sectors, is not bullish for equities because XLE is 90% oil and natural gas. Oil going up is not bullish for equities. So we only have two tickers that are currently keeping the S&P from going down. It's the only two bullish sectors, right? XLV, which is at its low of day. XLF is toying with low of day. XLY, toying with its low of day. A lot of traders, or some traders, cannot trade a bearish day. Some traders they can only trade a bull market, and that's all right. A trader needs to identify their own personal strengths and their own personal weaknesses when it comes to trading, and minimize their weaknesses and maximize their strengths. If you can't trade a red day, then log out of your broker and go touch grass. Go outside, mow the yard, play with your dog. Go read a book. Even the most dedicated even the most active of day traders do not need to trade every single day. They don't need to trade every single trend. Patience is very underappreciated in trading. Wait for your trade setups to come to you. Do not force them into the market, because the market is just going to throw it back in your face. We see here in ES, the Wednesday AM highs are still holding it. If I was trading right now, I would be looking at going short on a breakdown of the Wednesday AM high. That is what I would be looking at right now if I was trading. I will not be convinced that we go lower until we print and close a candle underneath this Wednesday AM high. These VWAP's way up there. Where are the bands? Yeah, here's -2 deviation of VWAP. Ever since pre-market, price has been riding -2 and bouncing off it at times. So here we are. We breached it once and wicked back up. And here's -1 way up here by that diagonal trend line. All right, it's 11 o'clock, guys. It's been a pleasure talking to y'all. If you liked it and want more, I'll think about doing another one of these for you. You can ask me questions. You can ping me. You can check out my journal or my what is it called here? Mr. Pickles Sentiment channel. And you can check out my trades and my train of thought when I enter those trades and see what I'm up to every day.
Thank you so much, Mr. Pickles, for doing this. I truly, truly appreciate it, and I know the members do as well. It was a lot of good, informative information.
Thank you. Thank you. Have a good day, guys.
Bye, y'all.